Hi there, everybody. Brock Vandenberg, Fund Manager for TaliMar Income Fund. Wanted to do a quick video and share my experience at a recent conference that both myself and some of my sales team attended, and that was the Western Region Commercial Real Estate Funding Conference. And essentially what this conference is an opportunity for various funding platforms such as banks, credit unions, debt funds like us, mortgage brokers, and others to get together and kind of discuss trends in the industry. People that are coming from all over the country, are coming to this event, from large billion-dollar institutional players down to small players in the marketplace. And so wanted to share some of the takeaways that I had from the event. And the first takeaway, number one, is that transaction volume is down considerably. And that thought is that a lot of borrowers are kind of waiting to see where interest rates are going to go. Today, the Fed is going to announce any rate cuts that they're going to have. But that doesn't necessarily mean that there's going to be a decrease in rate. Sometimes that the overnight Fed funds rate, which is what the Fed talks about when they cut rates, doesn't necessarily correlate or impact the 10-year Treasury, which is what normally a lot of debt is tagged to. So the discussion right now is, with the decrease in volume, why is that? And is it a result of borrowers and buyers just waiting to see where rates are? Number two discussion point is just the sheer amount of capital in the private debt space that is entering the space. And we've seen this over the last couple of years. Big institutional players have been getting into the private debt space, competing with private debt funds like ours to place capital. And that was another big discussion topic. And how was that going to impact the industry? And I think the two big impacts, number one, we're seeing loan to value ratios driven up. So there's more risk out there. There's lenders willing to take more risk on some of these transactions. And number two, driving rates down. And we're definitely seeing that, especially over the last 2 quarters, where we're having to be more aggressive in the rates that we're charging to place the capital that we have. And then kind of third, I guess we're talking about the leverage that's out there. So those were the main takeaways that I had from the conference. I think there's plenty of opportunity in the private debt space to continue to grow the fund, aligning ourselves and finding the right borrowers that we can lend to. But going over moving forward, I would anticipate seeing rates coming down for debt funds like ours, as we're having to be more aggressive in the industry to get those funds out. I go to a lot of these conferences. They're great ways of not only networking with others in the industry. It is a small world, kind of a small network of people that kind of play in this industry, but it also kind of gives me an idea of what to anticipate moving forward, especially into the second half or the end of this year. If you're interested in learning more about what I thought or what I saw at this conference, feel free to reach out to be more than happy to discuss it with you. But thanks for taking a moment to watch this video. If you're interested in learning more about our mortgage fund, feel free to follow the link below. I've included a link to the executive summary. And if you did like this video, please give it a like. I post a lot of content about the industry on our YouTube site. And this is by liking it and subscribing to our site, you'll be notified of any other video content that we post. Thanks for taking a moment to watch.